From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Is the battle over inflation over? That seems to be the verdict of financial markets this week after the Federal Reserve signaled interest rate cuts are ahead as early as the spring of 2024. Is that the right conclusion about inflation and the forecast? Plus, the big annual climate conference ends this week in Dubai with nearly 200 countries agreeing to a transition away from fossil fuels. But what does transitioning away from fossil fuels really mean? And is any of it likely to happen? We'll separate the hype from the reality. Welcome. I'm Paul Gigot with the Wall Street Journal editorial page, and I'm here with my colleagues, Alicia Finley here across from me in our studio, and Joe Sternberg from London. Joe, how are you?
I am well, Paul. Thanks for asking.
Let's start with the big economic story of the week, which is the Federal Reserve decision. In the inference that markets are taking, that the Fed is signaling that inflation has been all but conquered. That's certainly what financial markets seem to believe, as stock and bond prices soared after the Fed meeting and Chairman Jerome Powell's press conference in anticipation of interest rate cuts next year. Let's listen to the chairman of the Fed at his press conference after the Federal Open Market Committee meeting this week.
The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Joe, on the policy, the FOMC, Federal Open Market Committee that makes these decisions, didn't change a thing, kept its interest rate target fixed and kept the pace of its quantitative tightening or bond selling regime on the same pace. But markets, man, did they take off? And we've seen a big decline in long-term bond yields, and then equities really running high after Powell's presser in particular. Did investors read Powell correctly?
I think they did. No one was expecting that we were actually going to get a rate cut from this meeting, so it was never really going to be about what the Fed was going to do. It was going to be about the signals that the Fed was going to send about next year. I think that a lot of this ecstatic reaction you're seeing on Wall Street, I don't know that there's any other way to describe it really, is, Dow 37,000, the Treasury yield now down to 3.9. It was touching 5% as recently as October, the 10-year Treasury. A lot of excitement out on Wall Street, and I think that they're excited about three things specifically. They're excited about a word, they're excited about some dots, and then they're excited about the press conference. So I think the word was sort of a finicky insertion in the Federal Open Market Committee's statement that suggested that, although there's still some language about the possibility that they might still need to raise interest rates next year to combat inflation, they inserted some language in the actual statement that makes that feel much more conditional. So that was the first sign that investors got that things might be heading in an easing direction. And then we had those infamous dot plots, the quarterly projections that the Fed publishes at 4 of these meetings every year, in which the participants of the FOMC offer some of their guesses about the future path of interest rate policy, and that suggested for the first time that we might actually get as many as 3 quarter-point interest rate cuts next year, where previously the Fed had been signaling 1, maybe 2 at the outside. And then we had that press conference where Chairman Powell, the words that he was speaking could sometimes be taken in a hawkish manner, but certainly the presentation of it, the things that he chose to emphasize and some of the points that he chose to de-emphasize a little bit while he was talking to media and by extension Wall Street about this, definitely sent a signal that the Fed thinks that the hard lifting is done on inflation and that they're going to shift to being more concerned about the course of the economy overall. And Wall Street hears that, and immediately everyone starts thinking rate cuts to come.
Yeah, Alicia, I was struck by the distinction, the difference between what Powell said and a lot of those statements, one of which we heard, which was, well, we can't declare victory yet. We still have work to do. We are watching carefully. We're going to be cautious. And those statements, which would suggest the victory over inflation isn't yet here. And yet the body language and the kind of, as Joe said, the emphasis, there was a sense of, well, we've done a whole hell of a lot of work so far, man. We have really come a long way. We're getting close to the point where unemployment and inflation are really closely balanced in the Fed's monetary thinking. And I think the signal he was sending between the lines of his top line summary is, yeah, we're going to cut, and we may cut a lot next year.
Right. And I think some of this is just a contrast to his previous press conferences where he was more hawkish both in his statements and in his body language, and that they need to stay the course, and then they were making progress, but they still had ways to go. And here he kind of shifted the emphasis a little more to we need to consider the unemployment, the effects, long variable lag effects of the tightening. And because there are concerns that too much tightening could have adverse effects on the economy and unemployment. And so I think the markets are kind of reading into that. And as you said, that, they're baking in now 3 or 4 interest rate cuts next year. The question always was not how much more that they raise rates, but how long they would keep rates high. And I think now they're starting to think, well, rates are going to start falling pretty soon because Powell clearly believes that, inflation is, if it's not vanquished, it's pretty close to, they've beaten it down pretty far, and that they can start cutting. And that may also be a projection that the economy is starting to weaken. You're starting to see that a little bit in the labor market slowing, and that, maybe rate cuts would be appropriate then.
All of this tea leaf reading leaves the question of whether or not inflation really is vanquished, Joe. As it happens, the day before the FOMC report, even on the first day of the FOMC 2-day meeting, we got the monthly consumer price index reading for November, and it's still 3.1% higher prices than they were 12 months previous. Now, that's a long way down from the peak of June 2022, and it was 9.1%, but it's still not at the 2% target of the Fed. And if you look at the core inflation measure, which excludes food and energy, that was up 0.3% in November, which is 4% higher than the last 12 months. So if you take out gasoline, you take out energy prices, service prices in particular are still going up. So I guess the question is this a little premature celebration on the part of Wall Street and maybe the Fed?
Yeah, I see a couple reasons for concern here. And I think the overarching concern has to be that no one can possibly know at this point. I mean, the characteristic of the economy since the pandemic across a bunch of dimensions, whether it was basic economic growth or employment or inflation behavior and prices, has been that the economy has been behaving in a lot of ways that we don't fully understand. And clearly the Federal Reserve's models and a lot of other economic models didn't anticipate and are having trouble explaining now that it's actually happening in real life. So I think that one baseline note of caution that you have to add about the Fed here is that they appear to be trying to manipulate with a certain degree of precision outcomes like inflation or unemployment or potentially even headline economic growth, where they have to be asking themselves, do we really understand how our policies are affecting the economy right now?
Powell did point to multiple times in his presser to uncertainties ahead. So he seems to understand some of that.
Yes, the expression he's used in the past, which I think is spot on, is that it has felt as if the Fed was navigating by the stars on a cloudy night, which I think very vividly describes the dilemma they're in. But that means that they should be very attentive to some of the warning signs that you pointed to. The fact that core inflation has been so sticky, even as headline inflation is coming down because energy and, to a somewhat lesser extent, food price increases have been moderating. And you also have this problem that a lot of households are experiencing, even if professional economists tend to discount it, where, the fact that we have disinflation, a slowing inflation rate, does not mean that the prices that people are paying in the stores are falling. The price level continues to increase by 3% or whatever the inflation rate is at a given period, and wages have not caught up to that. And so that means that you do continue having economic distress at the household level and, to a certain extent at the business level for as long as the Fed has not brought inflation fully under control. And so it's a little worrying that they're concluding that they can declare victory at this point when they can't see the stars that they're trying to navigate by. And we also know that households and businesses are continuing to experience a certain amount of distress as a result of the Fed's earlier policy failures.